Hi traders, do not trade breakouts until you watch the whole of this video. You know why? In this video, I'm going to show you how to trade high probability breakouts, what others call true breakouts only, so that you increase your chances of succeeding in trading binary options. Bonus, what you learn here can be applied in Forex trading. And this is coming to you from Binary Winners Club with your presenter being Bernard, a Forex and binary options pro trader. Now, you may need to relate with this, that from time to time as you trade the markets, you've seen a candlestick breaking, maybe your support level downwards, and before it even closed, you said this is a serious breakout, and in a serious breakout like this, I'm going to sell. And immediately you did that, price closed right above support and even went the opposite direction of what you intended. You need to avoid trading like that. And so now, how do we then trade these what I call high probability breakouts? How do you identify them? Let's start by looking at what breakouts are. Now, a Forex breakout, as we know it, this refers to when price breaks above a given price level or below a given price level. This could be whatever asset. It could be a Forex pair, it could be something like gold, it could be anything, even a stock. Now look at the image we have here. In our image, we have, let me just use a few arrows. What you see here is we have this particular candle coming from below. We have a resistance level. This line you see, this is our resistance. Okay? Resistance levels are or areas are those above price. So the market is coming from this level, candle 1, heading to resistance. And what happens is this candle touches resistance. The next candle closes above resistance. Now, this is typically what we start talking about in terms of, in trading Forex or binary options. That is where we start talking about breakouts. Price breaking above resistance or breaking below support. Okay? Cool. Then now we need to look at why do we have to look at it that way? Because price can react in 3 different ways whenever it comes to a price level such as support or resistance. The 3 ways in which price can respond are: 1, price can be rejected at that level. It can be a rejection. Okay? This is a particular case where price will just come. Let's assume this is a level of resistance. Okay? So price goes up, comes down, goes that way, goes up, comes down a little bit, goes up. Now instead breaking that level, price pulls back down and even continues down. Okay? It can even continue down. So this is what we are considering a rejection, that price does not break above resistance. Instead, it changes direction. It is also what you hear people commonly say, a reversal. A reversal happens at resistance. Of course, vice versa, if we were to talk about the same thing at support. So if this is your support zone, so price is coming from the top, so comes a few candles, of course goes up a few candles again, then makes another move, and maybe reach at this level, doesn't break below it. You see it starting to move up and even changes direction up. Okay, so that is still a rejection of support in that case. Now, price can also respond by consolidating. Okay, And that is a case like this, where you see a level. This could be support or resistance. What happens then in this case is you see price coming from somewhere like below here. That if that is resistance, pulls back a little bit, moves up, pulls back a little bit, moves up again, pulls back, moves up. Now reaches resistance, does not go above, does not move below. What you see happening is price chooses to trade around this area. Okay, candles moving just around, so almost all candles touching that same level for quite some time. So price is consolidating at that level. And so if you did if you did a reversal, and for binary options you can even OTM, because price will just expire around the same area. Okay, and so you might end up holding an OTM. Okay, so the other way, the third way price could react at support or resistance or at a market structure is breakout, which is our concern. Okay, now a breakout happens when price fails to respect your level, the level on your chart. Instead, just pierces through the level and proceeds in the same direction. Okay, now in that case, of course, I'll show you some better illustrations later on. Assuming this is your support level, okay, assuming that support level, so your price is coming from the top. So some little bit of price had gone up, comes down a little bit, goes up, comes down, goes up, comes down, goes up a little bit, comes down, and then just cut through. So at this point, we are saying price has broken your support. So it's a breakout, or what you might call a breakdown. Others would call it a breakdown. We've simply broken your level. Price has broken a support level. Okay, so that's what we are saying is a breakout. Now let's carry on. Reversal. So on this particular chart, I want to show you all the three things. A rejection, which I said is also like a reversal. It's actually a reversal, consolidation, and a breakout on this chart, so that you know how these things look on a real chart. Okay, so case number one here, price started from your support level. So this is a support level. Okay, bounced here, went up there. Actually, even this is still a reversal. So price started from this level, went up, came down to the same level, didn't break the level, instead changed direction. So this case number one, a reversal or rejection. Went up to resistance, did not break it, instead changed direction, another reversal. Now look at this particular case. Okay, look at this particular case here. There's an interesting case here I would like you to look at, this one. Now this is not a reversal immediately. It is a reversal, yes, but after some time. You can see candle 1, candle 2, candle 3, candle 4, candle 5, candle 6, all of them at the same place. All of them are touching the same level. And so if you were doing like a 5 candle or a 3 candle reversal, you were likely OTMing or losing this trade, because price did not change direction immediately. It spent some time. It consolidated around support. Okay, now after consolidating, changed direction, went the way up. Now look at what happened. Unlike here, where price just touched the level and changed direction, which is a reversal or a rejection, touched the level merely and then reversed. This time it did not touch and change direction. Instead, the candle closed above the level. Now that's a different story. Price closing above a different level is a different story. So in this case, look at that. This candle did not touch and react like here, where it left a wick, like here, where it left a wick, like here, where you could see wicks. Here is a large candle, and the body of the candle closes right above that level. Is it a high probability breakout? We'll talk about it. But for now, price closes above resistance. The candle, you can see the body is above resistance. That is considered a breakout or a break up. A breakup is when we talk about a breakout to the upside, and a breakdown is a breakout to the downside. Okay, then following the same logic, what did you see happening next? So price at this point touched this level, then reversed. So this was a rejection or a reversal. But then what happened next? Look at this candle when it came back. The candle closed above resistance, and that is a breakout again. High probability? Yes or no, we'll talk about it. So price, this was a support started here. Price comes back to the same level, and we see another candle closing below support. Is it a high probability breakout? We'll talk about it, don't worry, right? And then changes direction and goes the other way. So you see, rejection, what we call reversal, rejected and then reversed, rejected and reversed, consolidated, then reversed, broke out and continued, reversed, broke out and continued. So we have three. We have a reversal, a consolidation, and a breakout. And so you could be asking, Bernard, now I know the three. Next, you could be asking, where do you expect your breakouts to happen? Where do you expect breakouts to happen? In this particular chart, I've already shown you where to look for breakouts. I prefer looking for breakouts right at market structure levels like support and resistance. This resistance, this is support, this is resistance, this is support, this is resistance, this is support. Okay, so those are the particular areas I'm interested in to see that the market is breaking above those levels, that's resistance, or breaking below those support levels. Okay, that's just one of the tools you could use to you know, target or aim at reversals that make sense, not just any random breakouts. So you look at breakouts that make sense, reversals that make sense, and even consolidation that you can even target at some point. And so we've only seen support and resistance. Other areas where you would expect to see a breakout would be swing highs and swing lows. You know, as usual, the market does not move in a straight line. The market, as usual, will always move in waves. Move up, move down, move up, move down again, you know, move up, move down. Then in that case, in that order, the market's always, you know, moving in those swings. So in our particular case, this is a swing high. This is another swing high. The market is moving up. This is another swing high. So I could wait for breakouts around here. And for sure, as you can see from this particular example, this was a breakout. This was a high, all right? Price broke that high and continued. And this could also be another breakout because this was a high. Price broke that high and continued. So in terms of breaking to the downside, this was a low, a swing low here. Price broke that level here. So you could actually look for breakouts at swing highs and swing lows. If you're using pivot points, those pivot points, the particular levels drawn on your chart, will be your consideration, where you are aiming at target, you know, picking or identifying high probability breakouts. Psychological numbers, which are also called round numbers, those are also, you know, areas you could be interested in. Areas ending in 3 digits or ending in 2 digits, that is 000 or 00. Those could be potential areas for you to target breakouts. Okay. Trend lines, I'll show you an example. A trend line, a break of a trend line could be considered a high probability breakout if the trend line has been drawn quite well. Then price channels, for those who like trading with indicators like Bollinger Bands. So the assumption is the breakout the break of a Bollinger Band might be considered a breakout. You can also use envelopes, trend envelopes, if you're familiar with them. They are almost like Bollinger Bands, slightly done differently, but then you can also use those. You can use moving averages. If you arrange moving averages to, you know, tell you the direction of the trend, and then you see a candlestick or many candlesticks breaking one direction or the other, depending on whether you're trading, you know, with the trend or against the trend, or simply candle breaking above a moving average. Maybe just to demonstrate this, maybe you have a particular moving average. I don't know how to draw that. Let's assume we have a moving average somewhere here. Assume this is a moving average, maybe 20 SMA, and price has been coming up, going down, going down, going up, going down, moving up, going down, and then breaks above. For some traders, this could be considered a breakout. There are those who have those strategies. So I'm just listing all of those that you might use. Chart patterns, you might be having things like a double top or a double bottom, a triple top, a rectangle, a triangle. And so once that pattern, for example, once that pattern has been completed, let's say we have a head and shoulders pattern. You have this. That is shoulder number 1. Price comes to somewhere here, goes up, then comes back to some level like here, then goes up again and moves back. Now, for those who trade head and shoulders, you know that this is the head, shoulder number 1, or the left shoulder, the right shoulder, or shoulder number 2. So your target is when price breaks that level, this level where the neck, yeah, we have this head, you have the shoulder, so the neck level. When price a candle breaks strongly below this level, that could be considered a breakout of that chart pattern. Then we have Fibonacci levels or ratios like 50 or 61.8 or 32, 32 level. Is it 38.2? Yes. We have levels like those. So that could be a level where you could be looking for breakouts. Then, breakouts can occur at random levels on your chart, particularly when you are, in a market that has fundamental news, that is news releases, fundamental releases or fundamental aspects. In this case, if news items are coming out, news releases or announcements on interest rates, on NFP or others, the market can easily start breaking out of a level and you'll be very surprised. You might look around and see no support, no resistance, no pivot point, but you see some breakout that is a bit strange. Those could be random levels. But of course, a random level, if you check at it carefully, if you look at it carefully, you will spot either pivot point or a support resistance or a trend line somehow. But that is after the fact, okay? Now that you know where you can be looking for breakouts, let's carry on and see how do you confirm a breakout. And number 1, you would expect a candle to break above a level. So let's see, you have your resistance here. This is your resistance, okay? So price is coming from below. Number 1, breaks resistance. So here we are confirming using a range first. So we have a resistance, price broke above resistance. There was another resistance, so which you created. Of course, let's assume now we have this becomes support. So price goes to that level, bounces back to this level, and then you see a candle close above the new level. So in this case, you have this level acting as support, but of course when price was below it is resistance. Now this level acts as resistance when this one is acting as support. So in this case, when price is between the two levels, this is resistance, this is support. So you have like a range in between here. So market going up, bounces back down, bounces back up. And then you see this particular candle closing above this black line, which is your resistance. And now this is what we consider what? A breakout. Okay? You could follow those steps. Now, that is just one way of looking at things. So let's see more examples of breakouts, or true breakouts, or high probability breakouts. We'll see them. Now, if you look at this, you can see clearly that we had a level here, and the level was this. This is our level, okay? Maybe I can use this as a zone, okay? So touched here, touched here, touched here. So it's actually a strong support. Then you suddenly see a very strong candle, this particular one, closing heavily below that level. Unlike previous candles, all these other candles did not close below that level. So you can see how many candles these are. But this particular candle closes below the level. Now that is considered a breakout candle. There are those who would wait for another candle to close below the level or above the level as confirmation. Then let's see, that is the a break of a support or a resistance, in this case a support. Price can also break another support or resistance which is not horizontal. These are called diagonal support resistance levels, and in this case we call them trend lines. Trend lines are diagonal, support resistance levels. So in this particular case, price touches here and respects the level, respects this level. So I believe this and this and this combined probably are giving you the trend line, even with this combined. So it's a strong trend line. Then you see a very strong candle closing below that line, and that is a breakout candle. Okay, great. Carrying on from there, we talk about both true and false breakouts. I know you would want to know, now that we are talking about high probability breakouts, as it's important for you to know also the false ones. And if that is your interest, I will show you that. Well, if you look at our chart, we have, this is a resistance level. At the moment, this is considered a resistance level, this black line. And you can see this candle touched, did not even close near the line, closed well below. But there's a wick above the level. That is a false breakout. We have another candle here that pierced through the level, but closed below the level. Another false breakout. And we have another candle here, pierced through the level significantly, but ended up closing below the line. Another false breakout. That is why one of the rules I'll share with you, and maybe I'm mentioning it in advance, is do not trust candles that are still running. And by running, what I'm saying is a candle that has not closed. If you have a 5-minute candle and you see this kind of behavior when we still have 3 minutes remaining, don't call that a breakout, because maybe on minute number 3, the candle was breaking this level, but by the time it closed, that's the full 5 minutes. That means the remaining 2 minutes, the candle went below. Do not trust open candles. Maybe I'll make it simpler that way. Only trust closed candles. Okay? And considering that particular mention, look at this candle here, this one. This is now a breakout candle because the body closed above the level. The body did not close above the level, did not close above the level, did not close. But this particular candle, which one? This one. That particular candle closed above our resistance level. And that is now considered a true breakout candle. Okay. Very good. Now we carry on. We want to see, how do you tell if a breakout is high probability? How do you know which breakouts are going to be profitable, are going to continue in the direction of the breakout? That is the question you're asking, and I am saying I will give you the answer in just a few minutes to come. Great. So these are my own ways of determining if a breakout is valid or invalid. Number 1, ensure that there is a strong market level that the breakout candle has broken. In other words, remember from the previous slide, we talked about things like support, resistance, pivot levels, price channels. So for my particular test or preference, I want the breakout to happen at a strong and reliable market level or market structure level, like a support or a resistance level. If I see a strong candle, like a long candle, and I can't see support or resistance, I will ignore it. I want the candle to break a support or a resistance. So that is qualification number 1. Qualification number 2, I want to ensure that the breakout happens after the market was in a range. The market was moving in a range, up and down without going far up or far down. The market was squeezed a little bit before the breakout happens. Quality number 2. Quality number 3, I want the breakout itself to be accomplished by a strong candle. And by a strong candle, I mean a candle with tiny wicks. And it's not always that it should have a tiny wicks or very small wicks. It could have long wicks, but let the body itself be a big body. Let the size of the body be larger than several other candles prior to the candle that has broken your level. And I would expect that at least 20% of the body of the candle that broke your support or resistance level, or that broke your Bollinger Band, or that broke whatever other market level you were having, even a round number, let the body of that candle, at least 20% of that body, be above resistance or below support. Okay? We'll be able to show you that. Look at this particular slide. If you look at this candle, the breakout candle, you can see like 50% of the body is above the level. And to me, that's a very strong breakout. Okay? That's a very strong breakout. So then what is the next criteria? The next criteria for picking high probability breakouts, I want to ensure that when a breakout is happening, the volume is rising. For a breakup, let volume increase when breakout is happening. Meaning, there are many participants in that very, very breakout. There are many either buyers if the breakout is to the upside, or there are many sellers if the breakout is to the downside. High or increasing volume is a powerful tool in determining a high probability breakout. This particular one, check it carefully. I also, if possible, I want to trade breakouts that are in the direction of the trend. If the market is trending upside, or that's the upside or trending upwards, my focus is I want to trade breakouts of resistance. If the market is trending downwards, I want to focus on trading breakouts of support. All right? Not always. There are cases when I trade the reverse, but higher probability, I have to say that again, higher probability breakouts are always in the direction of the trend. And you might be asking, what is it that you are trying to demonstrate? Go back to your chart. If you look at price from here, one thing you notice is this part alone tells you the market was trending upwards. And so was playing around here, consolidating around resistance, and we had a breakout. This is a typical example of what I'm calling a breakout in the direction of the trend. The trend is upwards, or it's an uptrend, so I expect to trade break of resistance. Cool? Yes. The other criteria I would consider is the breakout candle should be larger than the previous candles. In many cases, that is valid. Now, I need to mention that you don't need all the 7 characteristics to align or to line up for you to qualify a breakout as a high probability. Just getting about 3 or more of these characteristics would give you a strong confidence that for sure that could be a breakout that you can always consider investing in or setting your entry around. Okay? So let's look at some filters you could use, some technical filters for high probability trades. Look at this chart. On this particular chart, what we have is resistance. There's a resistance zone here. We also have Bollinger Bands. Bollinger Bands indicate volatility. They can also show momentum, they can show trend, many things. One thing you notice on our chart is we have resistance. You can see that here, a resistance area. Then we have a Bollinger Band here. Now, what you see here happening is price is consolidating. Remember I said I want to see a market squeeze. Look at this, a market squeeze. Okay, before a breakout. So in this particular case, the market is squeezing. The market is trading within a tight range here. You don't see it moving beyond that. Unlike here where it moved up very fast. And here where it moved up very fast. Or moved down very fast. Here it's just playing around this rectangle zone. Okay? So that's a squeeze. Then the next thing you see is a very large candle. Larger than the rest of the candles prior to it. Closing above your resistance. And also closing above your Bollinger Band. Now, how many confluences did you see? in this case. Let me show you in case you are not seeing them quickly. Resistance. Confluence number 1. I want my breakout to happen at a support or a resistance level. So factor number 1. Factor number 2. I've added a Bollinger Band. So remember we talked about where you expect a breakout. Now in this particular case, the breakout has happened on 2 potential areas, resistance and a price channel, which is a Bollinger Band in this case. So 2 factors. The third factor, you can see price was squeezing here before the breakout. So that is factor number 3. And you see a very large candle. Sorry. You see a very large candle here. The breakout candle is very large. That is factor number 4, if not 5. And you also spot number 5. The body of the candle is the part of the body that's above the broken area is large. I gave a 20%, as my measure that the breakout is valid. In other words, at least 20% of the body should be above resistance or should be below support. In our particular case here, what do you see? What you see is more than 50%. If you consider that as your breakout level here, you see like around 50% or more than 50% of this candle body is above the broken area. So you have about 5 things telling you this is a true or a high probability breakout. Carrying on, next is we want to see another example on how to use another filter, volume. How do you use volume to tell if a breakout is valid? Look at this chart carefully. We see the market is trending up. We have a trend line here. What do we see? There's a volume indicator down here on the sub window. Then we see the market break. You see, you spot here, price bouncing off from that level. This time it doesn't bounce from that level. It breaks bit by bit using tiny candles, keeps on breaking bit by bit using small candles. And now we have a larger candle that actually breaks that level. This larger candle that confirms the breakout. But if you were to connect the breakout, look at, like, this is the candle that actually finally finished the breakout. And if you connect this, I don't know how to draw this correctly. Look at that candle. Look at the next candle. Look at the previous candle. What do you see from those 3 candles? The one that started the breakout, the one that broke out, and the next candle that confirmed. As the breakout was happening, down here, volume was increasing. This is a smaller volume bar, followed by a larger volume bar, and even a larger, a more, a more, I want to say that what you see here is a rising volume. A rising volume. Larger volume, even larger volume, and of the 3, this was the largest volume bar. All right. So if volume is increasing as a breakout is happening, that confirms a breakout. All right. Great. Can you use MACD as a high probability breakout filter? Let's see. In this case, remember MACD is a momentum indicator. MACD is a momentum indicator. It's an oscillator. Yes, it is a momentum indicator. So we have a channel drawn here. Probably this is a trend line. You can consider that as a trend line starting there. Okay, this is a trend line, an uptrend line, and you see price breaking that level. But when you connect these 2 levels, what do you notice is happening down here? All right, look at MACD. When MACD lines and the histogram are above level 0, I believe level 0 is the one that's around here. Okay, that is the 0. So when we have the histogram above and the lines are above, that is a bullish market. When you see them below, this is a bearish market or a downtrend. So the market has been moving up, 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 comes back to support. Now remember, it's a trend line, a support that is achieved through a trend line. the market breaks that uptrend line, but what is happening with MACD? MACD is already bearish, confirming that momentum is to the downside already, and that gives you another, factor to believe that your breakout is valid. Pro tips on how to get high probability breakouts and use them in your trading. Number one, always wait for the candle to break out first. Do not trade breakouts if the candle has not closed. Number two, trade breakouts in the direction of the trend if possible, always. Number three, take breakouts at market structures, support and resistance levels, or those other indicators you could be using like pivot points. And most breakouts fail. You need to be aware of this. A number of breakouts fail. You will see, for example, you would see like here. Let me go back a little bit. You would see here. Okay, some breakouts fail. Look at this. You would have imagined this a breakout, this particular candle here, because it broke below support. The next thing you see is price bounces back opposite direction. So many of these fail for sure. Okay, you could also have thought this candle has closed below support, so it's a breakout. No, if it were a breakout, it could have continued moving down, but this one changes direction and goes up. Same thing is happening here. If you were to extend this line, broken resistance is support. What you see is the market comes, closes below the level, and you say, oh, fine, this is a breakout. The next thing you notice is price goes up instead. So it's not all breakouts that are valid. And of course, breakouts like this exist in the market. They are called false breakouts, or they are called fakies. Some people would call them so. Don't worry about that. Just follow the few specific rules I've shared on how to determine a valid high probability breakout. Filters, I've shown you how to use Bollinger Bands. I've shown you how to use a Bollinger Band as a filter. I've shown you how to use MACD as a filter. Okay. And I think I've shown you how to use volume as a filter. Now on your own, this is an exercise. So check how you can use moving averages, ADX, divergence, time. Someone must be asking, Bernard, time. Yes, time is a filter when you are trading, and you may need to go and find out. Later on, I will be able to share a video on how to use time as a filter for trades. Okay. As for now, that is where we stop in this particular video. And I need to promise you that later we will be having breakout strategies shared on this particular channel, Binary Winners Club. I will be sharing some breakout strategies you could be using for your binary options trading. And therefore, for now, start identifying those true high probability breakouts. And even with that knowledge, you may craft your own strategy or system for better results. Up to that point, may I thank you for watching this video and watching the other videos that are on our channel, Binary Winners Club. Do not forget to subscribe if you are not subscribed. Please subscribe. The good thing when you subscribe, and I hope when you subscribe, you also, hit that notification bell so that you are informed instantly whenever we upload new content, and so that you are able to watch new content immediately it's uploaded. And apart from subscribing and hitting that notification bell, I would expect you to also check out for new videos whenever they come. Even those that you have not watched, you may subscribe now, and the channel already has over 10 videos. You go and check those others. But in case you have enjoyed our video, this particular one, just like them or put a comment there telling us what made you enjoy watching the video, and do that to the rest of the videos, and we shall be able to meet in the next video. Thank you so much. From Binary Winners Club, your presenter was Bernard. Bye-bye.